Hi, everyone. Welcome to Forbes Talks. I'm Diane Brady. I'm here with Bill Baldwin, Senior Contributor, former editor of Forbes magazine. Bill, you're talking about the IRS, a very scary piece around going after small fry. Explain a little bit about how this story came on your radar.
Well, you know the old line, I'm from the government, I'm here to help you. This is different. This is, I'm from the IRS and I'm here to spank you.
Ouch.
And the main problem comes from international reporting forms, which a lot of people don't even know anything about, but you're supposed to know about. So, classic example, an American citizen has some relative in Britain. They get an inheritance. Is it taxable? No. Inheritances are not subject to income tax. They file their tax return. They think they're clean. In fact, their tax preparer says, you're clean, nothing to worry about. You don't owe tax on an inheritance. That's just not how income taxes work.
Right.
And then, poof, it turns out you had to file a form saying you got the inheritance, even though it doesn't change your taxes. And if you don't file the form outright, there's big penalties.
Wow. Okay, so talk about that, because you have some examples in this story of people who are facing, really hefty fines that I thought the IRS didn't necessarily go after people that small. So just walk us through some of the cases that should inspire fear.
Well, to go back to my example of the American who inherited from a Brit. This is a real example. I don't have the name of the person. It's anonymous, but a lawyer told me about it. And she said her client was as follows. He had a mother who lived in England and was a British citizen. He's an American citizen. He's naturalized. He's working here. He pays all of his taxes on time, right on time. He doesn't short them a nickel. And his mother died and left him some money, and kind of surprised him because she says he actually thought she was rather indigent and barely had enough money to pay the rent. At any rate, she had more than $100,000 squirreled away. She bequeathed it to him. He got a wire transfer from his bank. All clean, right? Is it taxable? No, it is not taxable. It's not taxable income. He got the inheritance. Was he money laundering? No. It was a wire transfer. There was no suitcase of $10,000 bills. Okay, so he got the money. He asked his tax person, what do I have to do about this? No problem. Then he got a statement from the bank saying, we did wire money in and it did come from abroad. And he said, wait a minute, what do I have to do about that? Turns out he has to file Form 3520 for foreign trusts. Is this a trust? Is he dodging money by putting it in the Netherlands Antilles and using phony credit cards? No, it was an inheritance. Okay, so he rushes back to his tax preparer and they fill out the form and they send it in 3 weeks late. The IRS is going to penalize him.
How much was the penalty for?
Well, that I don't know, but the penalties can easily run to $10,000 per form.
I mean, one of the things that's surprising, the complexity of the U.S. tax system to begin with is always legendary. And the idea that the average, retail, or consumer, I would say, is, at fault here. Are they not easy on the likes of us? I thought they go after the big fry.
Well, the whole point of these reporting rules was to go after bad guys.
Yeah.
Tax cheats, drug dealers, terrorists. That's why these laws are on the books. That's why the forms have to be filed. And I don't have any problem with the IRS walloping somebody with a big penalty if they used an international account, an offshore account, a hidden one, to cheat on their taxes or to smuggle drugs.
Right.
Go after those guys. That's just fine. But the problem is that the way the laws are written, the IRS can go after very innocent people who pay all their taxes but didn't file with that form, that 3520, but there are a whole bunch of other forms, by the way. And here's the problem, Diane. The IRS says ignorance of the law is no excuse. Now, do you think that's a fair rule?
Not when it comes to tax law necessarily.
No. So you can't rob a bank and then say to the cops, well, you can't arrest me, because I never got around to reading the part of the criminal statutes that said you're not allowed to rob banks.
Right.
Okay, that's absurd. So ignorance of the law in that case is no excuse. However, you look at the tax code, which with its regulations would be a stack of books, 6 feet high, and you're supposed to know all of that? I think in that case, the IRS should be going after people who don't file these international forms only when there's tax cheating involved or drug smuggling.
Right.
But if you pay all your taxes and you didn't memorize subsection 7103 of some code, good grief, why are you paying a penalty?
People have complained about this sort of thing for years, and the state of the IRS, you cover taxes a lot. The impression that I get is that they have been understaffed, and as a result, that's a good thing for the likes of you and me. Is that a fair assumption or not?
Bad assumption.
Okay.
I guess if you're a tax cheat, you can rejoice in the fact that until recently, they didn't have enough agents to find you. Maybe that was a good thing if you're a tax cheat. My readers are not tax cheats. And for them, the problem is it's just too darn complicated. It's too easy to mess up a form, and it's too easy for the IRS to mess up. And when the IRS messes up, you can't reach them on the phone. Now, that's going to change. There's going to be better funding for the IRS. There's also going to be a lot more agents snooping on you. Mm-hmm. But the problem for people who do pay their taxes honestly is that the IRS has been understaffed, and it sends out wacky stuff, and you have to deal with it. And often, in order to deal with wacky stuff, these angry notices and these threats, and we're going to attach your house and take your dog away from you and all that. If the problem is that the IRS is understaffed, you're not going to get relief from the IRS. And you're going to have to go to a lawyer or a CPA to file your case with the IRS and fight it. And that is not cheap. So even if you don't owe a nickel in taxes, you could wind up spending thousands of dollars trying to keep the IRS off your back.
Is there any advice that you have? I mean, you've cited cases where even the accountant said you're good to go. Given the complexity of what we're talking about, what does one do?
Well, what can you do? I mean, are you really going to memorize the tax code, you personally, because you don't trust your accountant to do it?
No.
That's just a tough situation. And apart from these international forms, I think in most cases, the IRS does not impose absurd penalties on U.S. taxpayers who make small mistakes. If you make big mistakes and it looks deliberate, they can hit you up for the back taxes plus 20%. And in some cases, a lot more than 20%, but 20% is kind of the going rate. So if you do a lot of underreporting of your taxes or a lot of nonsense in your deductions, you're going to pay the back taxes plus 20%. I don't think that's terribly unfair.
Let's look ahead to 2023, Bill, and some of the changes that have come through with regard to the tax code. And certainly there's more attention to some of these, I guess you'd call them the 1099 situations of small amounts of money through the gig economy that people are earning. What's happening there, and how much should people worry about that?
Well, there's two different kinds of 1099. So if you sell something on eBay and you have a certain transaction level, you'll get a 1099 from eBay, and eBay will send it to the IRS and say, you got X dollars. Now, what if you're just selling some antique you inherited from your grandmother, and you're probably selling it for half of what it was worth when you inherited it? Then you don't have a profit. So you sold it for $900, but you inherited it and it was worth $1,200. You're taking a loss on it. Mm-hmm. That does not have to go on your tax return. You will get a 1099. And when the IRS comes and says you had $900 unreported income, you say, no, I had a sale, and it did not have to go on my Schedule D because it was a personal item, mm-hmm. and I'm not required to report a loss, and I can't deduct a loss, and I'm not supposed to put it on. So a lot of these 1099s are to come out like that. And by the way, another classic example is crypto. If you have crypto, either a US or abroad, you get this 1099 from your exchange saying you did $12,000 worth of trades. You better account for that on your tax return. Put it all down. You might have lost money on it, in which case you have a deduction. You're not paying extra tax.
Right.
But don't leave it off, because
Right.
then you're in real trouble.
Right. So good advice. Anything else that's on your radar with regard to the IRS? I know we're talking about really their attention to, the average consumer, and it's likely to increase. It sounds like they're beefing up resources, and so be extra diligent.
Well, I guess you should. I think it'll be a while before those 87,000 agents come out of the woodwork to harass you. It's interesting that when the IRS tries to zero in on tax cheats, they don't often go after billionaires. You know who they go after? People who claimed the earned income tax credit.
Really?
These are low income people who fudge on whether they have one kid or two kids or whatever the rule is. And there's a lot of enforcement in that area. And to be honest, a lot of fudging, but the amounts are small. Whereas if you own a $1 million a year plumbing business, you could be making a lot more money than you're reporting to the IRS. And it's tougher for the IRS to go after those people who deserve to be audited
and can
than
hire
it is
lawyers.
to go after some single mom with two kids.
Yeah. Well, it sounds both scary and unfair, but like death, I suppose it's something that we cannot do without, taxes. So thank you for the insights.
All right. Thank you, Diane.